Hi, I'm Joe DaGrosa. My public and private equity experience spans more than 30 years. Along with my partners and team, I've successfully completed transactions across multiple industries, including sports and entertainment, retail, insurance, and healthcare. I actually grew up in Yonkers, New York, and attended Syracuse University, where I received a bachelor's degree in finance, accounting, and statistics, so I was very numbers-oriented. I began my career as an auditor at Payne Weber, later became a partner at Maplewood Partners, which got me into the private equity business, and then went on to form 1848 Capital Partners with two other partners. Most recently, I formed General American Capital Partners and DaGrosa Capital Partners with my partner, David Neidhart. I've served on multiple boards, including Eastern Airlines, Jet Support Services, the Franklin Mint, Big Apple Entertainment, and London Bridge Entertainment. Most importantly, I have four brilliant grown children, three of whom live in Miami with me, and my youngest attends Boston University. By way of background, General American Capital Partners is the private equity arm of our firm. We're focused on making control and influential minority investments in companies not only in the United States, but Western Europe and also Latin America. GACP invests in businesses where we can partner with strong management teams to create long-term investor value, which is always the key. My partner, Dave Neidhart, and I have worked together since 1999, and together we've sponsored a wide range of acquisitions totaling about $500 million in capital deployed. Most recently, we acquired the Girondins de Bordeaux, which is a French soccer team in the Premier League, one of the most storied clubs in all of French football. They've been around since 1881, have a fantastic fan base, and we're very proud to be part of the success of the team. We've also expanded our investments in the soccer space by acquiring SoccerX, which is the world's largest trade show for soccer globally, and we'll be taking them to China actually later this month, so I'm very excited about that. A little bit more about SoccerX. SoccerX is widely recognized as the leading event provider for the global football industry, what we call soccer here in the US. In addition to providing great networking opportunities, we give exhibitors an opportunity to have access to the leading business professionals in the world of soccer. We also have a news distribution arm through SoccerX, which is widely recognized as one of the best channels for insights and information on what's happening inside clubs. DaGrosa Capital Partners is our family office arm where we invest in public securities, both equity and debt, both long and short. So I serve as the Chief Investment Officer, and my partner, Dave Neidhart, is the Chief Operating Officer, and we make all our investment decisions together. DCP employs an event-driven strategy. We're focused on delivering long-term value to our accredited and institutional investors. Our real focus is on making investments in companies where we take a 12 to 24-month investment horizon. So we're not really focused on trading at all. We're looking to take a private equity approach to public securities investing, which means a focused portfolio, typically 15, no more than 20 investments, both long and short. On the long side, we're looking to be a friendly activist. I've worked with management teams for close to 30 years, helping them create value. And I think we're in the very unique position to explain to management teams how they can create additional value for shareholders, including in some cases going private. On the short side, we're looking for companies that once again are 12 to 24 months away from going into bankruptcy. We're not looking to determine whether companies are overvalued from a PE perspective. We're truly looking for companies that we believe are going to be out of business, and therefore the value of equity will be wiped out, and to the extent that there's publicly traded debt, that debt value will be significantly diminished. We're also looking for companies emerging from bankruptcy, and we've seen some great opportunities there, and I think those opportunities are just going to continue to expand over time as interest rates slowly but surely go up over the next few years. So we have a very interesting approach at GACP, which is the private equity arm of our business. We are looking for businesses that we believe are going to withstand the test of time. And there's a big challenge going on in the world today. Technology is rapidly destroying value of a lot of traditional companies. So to the extent that we are investing on the private equity side, where we're taking a 5, sometimes 7-year approach to our investments, we're looking for businesses that can withstand the encroachment of technology. That's one of the reasons why we invested in sports teams. We started with the Girondins de Bordeaux in France, but we're actively pursuing other clubs for a very simple reason. Not only are we finding that valuations are relatively reasonable, we're also finding that we're facing far less competition. So we're seeing a lot of proprietary deal flow. But most importantly, we believe the teams that we're looking at, and teams in general, are going to be great investments because they provide content to the internet and they're not going to be rendered obsolete. In the case of Bordeaux, the club's been around for 138 years. We believe they'll be around for at least another 138 years more. And we believe teams in general, sports teams in general, will withstand the test of time. So when we think about a 5, 7, 10, or 20-year investment horizon, we think sports teams are a very good place to be. Now, not all teams or leagues are created equally, so we have a very focused approach on soccer these days because we think that's the future of sports. And specifically, we're focused on Europe, starting to look at the United States. We're waiting to see if valuations can come in line with what we think are reasonable. In terms of the investors we serve at GACP, we tend to focus on institutions and large family offices. In the case of the acquisition of Bordeaux, we were very fortunate to partner with King Street Capital, one of the top hedge funds in the United States. We also partnered with Fortress on the debt side, so we're very proud to have both those firms as our partners. So on a going forward basis, depends upon the size of the deal, but depending upon the size of the deal, we are very selective in our partners, and we're very lucky in that we have a large stable of potential partners to work with. We found Bordeaux particularly attractive because of its storied history. It goes back to 1881, as I mentioned earlier. But most importantly, Bordeaux as a brand is known around the world, obviously because of their wines. They managed to stake a claim in mind share throughout the world. So I've traveled to multiple places throughout the Western Hemisphere, regular contacts in the Middle East and China, and everyone knows Bordeaux. And so from a brand point of view, we saw a platform that gave us a lot of opportunity to expand that brand around the world. And that was one of the key attributes of Bordeaux. I'd also mention that we feel that we paid a very good price for the team. We bought at a discount to what a lot of other clubs in the French league traded for. So we think we got a very fair deal, and we've got a platform to build on, and we're very excited about the future of Bordeaux. But Bordeaux is a proxy for soccer investments in general, which in turn is a proxy for finding businesses that can withstand the test of time. And our goal ultimately is to find durable businesses where we can create long-term shareholder value. Since becoming a football team owner, particularly in France, there's a number of valuable lessons that I've taken away so far. One is an appreciation for the cultural differences between France and the United States. I think in terms of the staff that works with us, they have a slower, which doesn't mean a bad approach, but a slower approach and a more methodical approach. I think as Americans and as American investors, we like to move very quickly. Sometimes it's ready, fire, aim, and I think there's a much more methodical approach in France. So I've learned to be a little bit more patient with our French colleagues because they've got some great ideas. It just takes a little bit longer to implement things there. In terms of the fans, I believe Bordeaux has among the best fans in the world. They've been terrific. They've been very supportive of our plans for the team. They know that they need to be patient, at least for this season, but I think they and we are very excited about the future. I live in Miami now. I've been down there about 21 years. When I first moved down with my family, I thought I'd be there for 3, 4, 5 years as we helped launch a private equity firm. But we, my family and I, absolutely fell in love with Miami. It's a beautiful city. We've had the benefit of watching it grow. I've had the benefit of watching my children grow there, and I consider Miami a home. So I really have the best of both worlds now. I get to commute to New York to see partners and friends, but I get to live in Miami, which is an absolutely spectacular place. Well, I've certainly enjoyed this opportunity to tell everyone a little bit more about my firm. If anyone has any interest in learning more, please feel free to visit us at gacpsports.com.